Hello and welcome to the Essential Property Podcast with your hosts, Paul Samuda and Amanda Woodward. With 45 years of combined experience in the world of property buying, selling, investing and developing, they are here to share with you their knowledge in the Stoke-on-Trent, Newcastle-under-Lyme and Crewe property market. Let's get started.
Okay, imagine this. A small change in paperwork, seemingly minor, but suddenly it's got the power to help stop serious financial crime. That's pretty much the big shift happening right now in HMO lettings, isn't it?
It really is.
Yeah.
This isn't just about, ticking a few extra boxes.
No.
It's a fundamental strengthening of the system against money laundering.
And it recognizes, doesn't it, that the whole rental market, not just the super expensive places, can be well misused.
Exactly. That's the core idea now. Vigilance across the board. Everyone needs to be aware.
Which brings us perfectly to our deep dive today. We're zeroing in on the real-world impact of these new anti-money laundering, AML, and sanctions rules. They come fully into force May 14th, 2025.
Yep, not far off now.
And we're looking specifically at Essential Management. They're an HMO letting agent, and what this means for their day-to-day, their processes, their team's responsibilities.
And we got some solid stuff to work with today. We're looking at Essential Management's own 2025 AML handbook, their specific action plans and templates, a briefing doc on the legislation itself, plus a couple of external articles explaining it all for landlords and agents.
So our mission really is to get a clear, practical handle on these new duties for Essential Management. What do they need to do? Crucially, why is it happening? And what steps does every single person on their team need to take for compliance?
Because ultimately, this is about protecting the business, but also landlords and tenants, making the whole thing more secure.
Exactly. Okay, let's dive in. What's the absolute biggest change here? The thing Essential Management really needs to get their heads around first.
I'd say the number one thing is the expansion. Mandatory AML checks are now for all rentals, period. Doesn't matter the price.
Before it was just the high-value ones, right? Over, 10,000 euros a month?
That's it, roughly £8,300. But from May 14th, 2025, that threshold is gone. Completely.
Wow.
It's a big statement, really, saying that, money laundering can happen anywhere, any level, so vigilance has to be universal.
So even for, a single room in an HMO, maybe quite low rent, Essential Management now has to do the full due diligence.
That's the requirement. It's a massive increase in scope.
Okay. And what else? Is it just the threshold?
No, not just that. There's also a very clear new rule. Check both landlords and tenants against the UK Consolidated Sanctions List.
The OFSI list.
Exactly. Office of Financial Sanctions Implementation. That check has to happen before any tenancy agreement gets signed. It's spelled out clearly in the briefing doc and the articles.
Which makes total sense, doesn't it? Stopping sanctioned individuals or companies from using the UK property market.
Absolutely.
And it's not just agents like Essential Management feeling this, is it? I think I saw something about private landlords, too.
You did. Yeah, that's right. Even private landlords managing their own places, no agent involved, they will have the same direct responsibility. They have to do the sanctions checks themselves.
Okay, so the responsibility is spreading wide.
It really is. It underlines this sector-wide push for better controls.
And with these bigger responsibilities, I'm guessing the consequences for getting it wrong are pretty hefty.
Oh, definitely. The sources are very clear. Fail to comply, and you're looking at potentially huge fines. And in serious cases, even prison time.
Prison? How long?
Up to 7 years. So yeah, the government is taking this extremely seriously.
Right. Okay. Given all that, it's good that Essential Management seems to be on the front foot. Let's talk about their 2025 AML compliance plan. What's their general approach?
Well, their AML handbook really spells out their commitment. They're aiming for full compliance with UK AML laws, HMRC regulations. This plan is basically their formal blueprint, how they intend to stop and spot money laundering or terrorist financing in their business.
So it's a structured thing, not just reacting. What's actually in the plan? What does it cover?
It covers quite a bit. Risk assessment methods, their internal controls, detailed customer due diligence CDD procedures.
That's the identity checking part.
Yeah, verifying who their clients are. Then there's record-keeping protocols, how they handle suspicious activity reports, SARs, and, really importantly, who does what. Roles and responsibilities, including their money laundering reporting officer, the MLRO.
Sounds comprehensive. Is it set in stone now, or does it get updated?
No, it's designed to be a living document. They plan to review and update it every year. or sooner if the rules change significantly.
Makes sense.
Which means, the team needs to stay familiar with it. It's not a one-and-done read.
Okay. Now, HMOs specifically, they can be complex, right? Lots of tenants, different ownership setups. Does the plan address the particular risks in that area?
Yes, it does. They've got a specific AML risk assessment just for HMO letting, and it flags several key things.
Like what?
Well, one big one is just the sheer number of tenants. Multiple income streams make it harder to monitor where all the money is genuinely coming from.
Yeah, I can see that. Way trickier than just one tenant paying rent. What else?
Also, the complex licensing for HMOs. There's a risk that focusing just on the license compliance might sort of mask other issues, potentially including money laundering.
Interesting point.
And HMOs often have higher overall cash flows just because you're collecting from multiple people. That can make it easier to blend in illicit cash.
Right.
Plus things like property improvements. They can be used for layering funds if costs are inflated or faked. And finally, HMO landlords are apparently more likely to use company structures.
Because it adds another layer of complexity for finding the real owner.
Exactly. Identifying the ultimate beneficial owners.
Okay, those are definitely specific HMO vulnerabilities. So how does Essential Management's plan tackle these? What are the main pillars of their compliance strategy?
It rests on several key things. First up, really foundational, is risk assessment.
Okay.
They use a risk-based approach, which is actually required by the regulations. They've got this detailed risk rating matrix.
A matrix. What factors does that look at?
It considers things like client type, is it an individual, a complex company, geography, where's the client based, where's the property type itself, standard flat versus, say, a large HMO, how payments are made, bank transfers versus cash, even tenant profiles.
Okay, so it's quite granular.
Yeah, and based on all that, they assign a risk level. Low, medium, or high. And that rating dictates everything else.
So like a landlord based overseas using a complicated company structure for a big HMO, they'd probably flag as higher risk.
Almost certainly, yes. And that high risk rating triggers more scrutiny. It means you, at Essential Management, need to dig deeper, maybe ask for more proof, do more background checks.
It's not just a label then, it actually changes the process.
Precisely. And that leads directly into the second pillar, customer due diligence. CDD.
Right, CDD. We hear that acronym a lot. What does it mean, boots on the ground for the team?
Okay, so for all new landlords and tenants, the basic procedure is verify identity, photo ID, like a passport or driving license, and verify address, recent utility bill, bank statement, standard stuff mostly. But for corporate landlords, it goes further. They need company registration docs, ID for all directors, and crucially, ID for anyone owning more than 25% of the company, the beneficial owners.
Got it. And the higher risk ones we mentioned, that's where enhanced due diligence, EDD, kicks in.
Exactly right. If someone's high risk, EDD might mean asking for, say, bank statements to prove where their money came from, their source of funds, or even proof of their overall wealth, like job contracts or business accounts.
Okay.
And this is key, again, for everyone, landlord and tenant, that OFSI sanctions check before the tenancy agreement is signed. Mandatory.
Really underlines that new requirement. So identity checks, address checks, company checks if needed, source of funds for high risk, and sanctions checks for everyone. What's next?
Next up is transaction monitoring. You can't just onboard people and forget about them. Essential Management needs to watch how rent gets paid.
How so?
Well, what are the accepted payment methods? What's the policy on cash, if any? Are there any weird or unusual transactions popping up? They also need to track deposit handling. Where did that deposit money actually come from? And just generally watch payment patterns for anything unexpected. And that rule we mentioned, payer name must equal tenant name. That's critical here. Plus the strict no cash, no crypto policy for rent.
Right. So if suddenly rent for flat 3 starts coming from some random company account with no link to the tenant.
Big red flag. Exactly. The team needs to spot that immediately.
Which leads us nicely to the next pillar, I suppose. Suspicious activity reporting, SARS.
Spot on. Essential Management has a clear internal process for this. Any team member spots a red flag, feels something's off, suspects potential money laundering, they must report it internally using a specific internal SAR form that goes straight to their MLRO, Paul Samuda. The handbook makes it clear. Reporting suspicion isn't optional. It trumps business pressures.
And confidentiality is key, right? No tipping off the client.
Absolutely crucial. No tipping off. Paul, the MLRO, then reviews the internal report and decides if it needs escalating externally to the National Crime Agency.
Okay. And keeping track of all these checks and reports, That must generate a lot of paperwork, digital or otherwise.
It does, and that's why robust record keeping is another vital pillar. They're legally required to keep all records, CDD docs, risk assessments, screening logs, any SARS or OFSI reports for at least 5 years.
5 years after the relationship ends.
Yes, after the business relationship ends or the transaction is completed, minimum 5 years. So having good, secure, organized systems for storing all this is non-negotiable.
Definitely need good systems for that length of time. And finally, I guess none of this works unless the staff actually know what they're doing. Training must be key.
Absolutely fundamental. The final pillar is staff training and awareness. Essential management stresses initial training for everyone, plus regular refreshers.
What does the training cover?
Key things like how to spot those red flags we discussed, the correct internal reporting steps, and just making sure everyone understands their own responsibilities in the whole process.
How do they deliver that?
They use the AML handbook itself, specific guidance for different job roles, practical checklists, even quizzes, apparently, to help make sure the knowledge sticks.
Sounds like they're really trying to embed it.
Okay.
So with all these new rules coming, they'll obviously need to tweak how they work day to day. How are they actually integrating this into existing processes?
Yeah, that's crucial. It can't feel like a completely separate, burdensome task. A big piece is updating their systems, their software, their workflows to build in that mandatory sanctions check for every tenancy.
So it becomes part of the normal flow.
Exactly. It needs to be embedded in their standard onboarding procedures. They mentioned specific templates, didn't they? Like new landlord onboarding, corporate landlord checklist, tenant verification form.
Yeah.
All those need updating to include these checks as mandatory steps.
So when a team member at Essential Management is setting up a new tenant, the system won't let them finalize the agreement until that OFSI checkbox is ticked, essentially.
That's the idea, yes. These updated templates and system prompts should guide the team through all the AML and sanction steps at the right time.
Makes sense.
And like we said, enforcing that payer name, tenant name rule, rejecting cash or crypto for rent that needs to be built into payment systems and communicated really clearly up front. It's about weaving it into the fabric of how they do business.
Okay. Now, thinking practically for the team listening.
Yeah.
Can we give some really specific examples of red flags they should watch out for, especially in HMOs?
Sure. Drawing from their own guides, with
Yeah.
landlords, watch out for anyone cagey about providing ID or explaining who really owns the property, especially complex company structures that seem overly complicated for no good reason.
Okay.
Also, any fuzziness about where the money to buy the property came from. For both landlords and tenants, third-party payments are a big one. Rent coming from someone totally unconnected. Frequent or large cash payments, obviously. Anyone who seems reluctant to provide documents. For tenants specifically in HMOs, someone who doesn't seem bothered about the actual property details or condition.
Like they just need any address?
Kind of, yeah. Or inconsistencies in their documents, offering to pay huge chunks of rent up front in cash without a good reason, trying to use someone else's ID, being really evasive about their background or finances. Those are all definite warning signs.
Those are great, concrete examples. Very helpful. Now, overseeing all of this is the MLRO, Paul Samuda. His role seems absolutely central, doesn't it?
Hugely central, yes. The MLRO is the linchpin of the whole compliance framework. Paul Samuda has the ultimate responsibility for overseeing the entire AML program at Essential Management.
What does that actually involve day to day?
It's a lot. Reviewing any high-risk cases flagged by the team, making that final call on whether to file a SAR externally or an OFSI report, being the main contact point for regulators like HMRC or OFSI, and importantly, he has the authority to stop or refuse any business if he suspects criminal activity.
So if someone on the team flags something via an internal SAR, it lands on Paul's desk to investigate further and decide the next move.
That's exactly it. He's the focal point for all AML issues, provides guidance, makes sure the policies are working, and deals with the authorities when needed.
Okay, great. So we've covered the new rules hitting May 14th, Essential Management's plan, the specific HMO risks, their procedures, red flags. What are the absolute must-do actions for Essential Management right now to be ready for that deadline?
Okay, immediate priorities based on their own assessment and the law. First, they must bulk rescreen all current landlords against that OFSI sanctions list before May 14th.
All existing ones, not just new ones.
All existing ones. And alongside that, refresh the CDD files for those existing landlords, get up-to-date ID, proof of address, proof of property ownership, and source of funds evidence for any high-risk ones. It's a big task reviewing the current portfolio.
Okay, what else?
Issue updated terms of business and privacy notices. These need to explain the new sanctions check duty clearly to both landlords and tenants and how their data might be shared if required.
Right. Transparency.
Definitely. Then, formally risk rate all existing landlords using their matrix, brief all staff, thoroughly make sure everyone gets proper training on the new rules and procedures, and finally, audit and update their AML systems themselves to reflect all these changes.
It sounds like a very, very busy few months ahead for them.
It certainly does. A critical period before that deadline.
Okay, let's try and pull this all together. Key takeaways from this deep dive for essential management.
I think the biggest one is just the sheer expansion of these duties. AML and sanctions checks now touch every rental, full stop.
No exceptions based on rent level.
None. So essential management, and honestly, every single person working there needs to be incredibly proactive and diligent. It means having those solid systems and processes we talked about, updating templates, weaving these checks into the daily workflow for onboarding and ongoing management.
And while the penalties for getting it wrong are, significant.
They are. Fines, even prison, as we said. But really, the bigger picture here is about building trust. It's about protecting the integrity of the property market itself.
For everyone involved.
Exactly. For essential management as a business, for their landlords, for their tenants, it's about stopping the sector from being exploited for crime. That's the ultimate goal.
So the message for the essential management team listening is pretty clear then. Dive into that AML handbook, get comfortable with the new templates and procedures, and if you're unsure about anything,
talk to Paul Samuda, your MLRO. Ask questions. Don't guess.
It's an ongoing thing, isn't it? Continuous learning, constant vigilance.
Absolutely.
Okay, so here's a final thought to leave everyone with. Compliance isn't just about following rules to avoid trouble. It's fundamentally about building trust and protecting the property sector's reputation for everyone. So the question is, what proactive steps will you personally take today to make sure essential management is ready, not just for May 14th, but for everything that comes after?
We hope you enjoyed today's episode, and if so, please hit subscribe and share with those who you think would enjoy it too. To get in touch with Paul and Amanda directly, please visit their website, www.essentialpropertyoptions.co.uk for more information. We look forward to sharing with you on the next episode.